Hello, everyone, and welcome back to another episode. My name is Jordan. I'm the Millennial Investor, and if you haven't seen me before, I track both a dividend growth portfolio and a growth portfolio, which is what we're talking about today, which is Amazon and iRobot. Shockingly enough, I own both of these companies. I own four of these in the growth portfolio right here in this order from largest to smallest: Amazon, Salesforce, iRobot, and Chewy. And I didn't expect to make back-to-back Amazon videos, but Amazon just announced that it's buying iRobot. That's right. So this portfolio right here is going to end up going from four down to three. So we're going to give the news of what just broke for Amazon, why they're buying iRobot, what they're hoping to achieve from this. Do I think that this is a good deal? Am I happy this is happening? Am I sad this is happening? Well, it's all these plans that I expect to come from this deal. If you haven't checked it out already, I have M1 Finance referral link down below. To get 124 people signed up so far is fantastic, and each one of them has got anywhere from $10 to $50 for signing up. So go ahead and do that if you're interested, as well as mentoring calls down below are available if you're interested in something like that. If you want to get started with the stock market, if you need help troubleshooting, get started with your dividend or growth portfolio, or if you want to get signed up with Yada savings accounts, swag bucks, or credit card referrals for up to $100, that is all down there below. Now, in this growth portfolio, we have four stocks: Amazon, Salesforce, iRobot, and Chewy. And iRobot will be going by the wayside because as of the most recent deal, we have a $1.7 billion offer from Amazon to buy out iRobot that was accepted. Now let's hop over to Fidelity here, which first off, we still haven't had any update. This update's once a month for my year-to-date performance versus the market right here versus these four. But if you look at my positions, I currently have 300 shares of iRobot at $61 a share right here. This is my average cost basis. Now, what price is Amazon buying out iRobot at? Well, $61 a share. So this is essentially going to cancel out exactly what I bought at. I bought at 61. I'm going to be forced to sell at 61 as long as this deal ends up going through and it doesn't get stocked by the United States government or any other type of entity. Okay. So I wanted to highlight two little paragraphs from Bloomberg. Okay. And this first one, and I think this highlights it perfectly because I mentioned a long time ago. I don't know if you guys remember this. I actually mentioned it about a year or so ago on the channel that I thought iRobot was actually a good acquisition target for Amazon. I've been thinking this for a long time. Now, it's crazy to see that they're actually doing it because I've honestly never went through this before. I've never held shares of a company that have ever been bought out, so this is a first for me. But anyways, let's go ahead and look at what Bloomberg has to say here. I think that they are right, honestly. When I read this, the reason why Amazon's buying it, I don't think it's because of the profits or the revenue growth. If we look at iRobot here, we go to Qualtrim and we pull up the revenue growth for the company. It is solid. They're about $1 billion company, or excuse me, about $1.5 billion in revenue every year. And the profits are anywhere from around $100 million or less as of late, with margins going through the toilet like of most companies. But if you look at Amazon, its revenue is significantly higher and its profits, and I don't think a company this small really makes up a big difference for Amazon. Last year, Amazon put up almost $500 billion with a T, $500 billion in revenue. So to see this coming from iRobot, I don't think Amazon's really focused on the money from this company because it doesn't really move the needle a whole lot. When this company's doing almost $500 billion in revenue, and then a company like iRobot gets bought out and it's barely producing $1 billion in revenue, I think it really doesn't move the needle a whole lot for a company like Amazon, and they're buying it for one other reason, which is highlighted right here. Amazon hasn't just bought a maker of robot vacuum cleaners, it's acquired a mapping company. To be more precise, a company that can make maps of your home. The company announced a $1.7 billion deal, which is about $61 a share, on Friday for iRobot Corporation, the maker of the Roomba vacuum cleaner. And yes, Amazon will make money from selling those gadgets, but the real value resides in those robots' ability to map your house. As ever with Amazon, it's all about the data. It goes furthermore to say that, slightly more terrifying, the maps also represent a wealth of data for marketers. The size of your house is a pretty good proxy for your wealth. A floor covered in toys means you likely have kids. A household without much furniture is a household to which you can try to sell more furniture. This is all useful intel for a company such as Amazon, which you may have noticed is in the business of selling stuff. Now, I want to play this in the background. This is a YouTube video, and this gives you an idea of what the mapping looks like for iRobot. Now, Now, I've talked to people and I've used this app before and I've seen it, and they get a really accurate description of what your home looks like. You can see right here when it masses out little hallways, you can see bedroom doors, you can see all these little nooks and crannies that the robot is able to map out. It really does a good job of finding all these different areas in your homes down to the exact square footage. Now, you have all different types of customizations because it has amazing cameras, like telling it where you want it to clean, where you don't want it to clean, what schedules you can do it around, where you want it to charge, how you want it to charge, all these different factors that you can do with a company's mapping technology, and Amazon is really buying it, in my opinion, for that. Like I said, I don't think the profits or the revenue growth is really what this company is going after. Now, I do think that this company will likely become much more profitable and likely will grow a lot more if they're acquired by Amazon, because there's so many different avenues for revenue growth opportunities and cost synergies with a company like Amazon buying out iRobot. Now, I know that Amazon is my largest investment. I have all these different projections for Amazon. I think that it's a fantastic company, and I really think that it's one that I'm going to hold likely for a very, very long time. It puts up lots of revenue growth. It has great margins on at least on some of its businesses, not on all of them, looking at you, international segment. But basically, it's a company that I want to own for the long term. And now with Amazon buying out iRobot, I think that also should be mentioned that they also just bought Aeris, because iRobot also just bought Aeris, an air purification company. But notice how that's not mentioned at all. Amazon is mostly buying this, like I said, for its mapping technology, and that's okay. But I think that for me as an Amazon and iRobot shareholder, I kind of hate and love this deal. What's the reason behind this? Well, if I go to my portfolio tracker here and I pull up my notes for iRobot, this is not really a price I want to sell at. Because right now, iRobot is having a horrible time in its business. What we didn't show was the quarterly revenue and the quarterly profits. And it just came out with its numbers about a week or so early because of this announcement of getting bought out. And the numbers were horrible. Last quarter, $255 million versus a year ago's $365. That is horrible. This was a massive miss on revenue, and I did not see this amount of downturn coming. Same thing for profitability. A year ago, the company produced a teeny tiny little loss, basically broke even for the quarter. This quarter, a year later, they lost $43 million. Free cash flow, negative $105 million. And that cash pile, which originally was one of the main bullish reasons for why I invested in this company, when I originally started investing in them, they had $400 million of cash on the balance sheet with no net debt, no nasty long-term debt. Now, instead of just a year ago, a year ago they had $415 million on the balance sheet net cash, and now that's down to $63 million. They've taken away 85% of their net cash position in a year. So this really makes me worried about the company. I will say that I honestly think that the stock price likely would have tanked on this earnings report if the company wasn't getting bought out. So I think I've probably had a saving grace there. But regardless, it's one that I'm not really wanting to sell out now, because I believe right now, while they're having all these struggles with the company, I think there's just a lot of opportunities for margin expansion, regardless of whether Amazon buys them out or not. With opportunities to expand their manufacturing locations in Malaysia, with opportunities to buy out other small companies such as Aeris, like you see in the photo right here. There's also opportunities as well as they continue to cut back on their workforce and really focus back on profitability for the business. And then there's other things too, of course, like for example, the tariff situation, which is finally coming to a little bit better situation than it was just a couple of years ago, as well as other things as well, like inflation coming down. And of course, shipping constraints are finally starting to get a little bit better. And I think over the next 1, 2, 3 years, that will get back to a normalized rate. And all the projections for iRobot come in similar to where I'm at, where I think that the opportunity long term is great. Right now in 2022 is awful, but the long term is great. So how do I think about this? Right now, if the company gets bought out at $61 a share, I break even. And that's true that I will technically be breaking even. But if we go to my all-time chart here, if we go from August of last year when I switched over to Fidelity to today's date on Sunday when I'm filming this video, and we put out all these different contracts and we find the iRobot ones, and we load up my all-time profit and loss statement with this company, it doesn't just factor in the shares that I've held with this company, and it also doesn't factor in the profits that I took last year. So when you look at this all-time chart with iRobot, it gives you a better picture of what I'm looking at. Because it's easy to look at this and just say, oh, okay, I bought it at 61. It's going to get sold at 61. I didn't make any profit. Well, that's not the case. First off, I sold my shares last year for a $1,700 profit, and then these are all the covered calls that I've had to get this company. I have $30 worth of losses right here, and then an 88, 97, 145, 164, 218, 330, 482 gain from options, as well as those share gains. So if it gets bought out over the last year or so of owning it, what is that? That's around 2,000 and some change in profit. So not bad whatsoever. But if it doesn't get bought out, if this deal get blocked and I'm forced to continue owning it, I will be just fine with that, because I think long term the company is going to be a lot higher than $61 a share. I think over the next couple of years between now and 2025, we'll get back to a level where this company is probably at $100 plus. So thank you guys so much for watching. I appreciate you watching all the way to the end. Like I said, if you haven't gotten signed up already, you can get $10 for getting signed up with M1 Finance, and 124 people have signed up for that so far, as well as lots of other things down below in the description, including $100 for getting signed up with certain credit cards down below, and also mentoring session opportunities with me and Yada savings accounts. But thank you guys so much for watching. We'll give further updates. We'll go back to dividend growth portfolio updates very soon. I know I've been making back-to-back Amazon videos. I did not expect to make it, but they came out with that huge deal, so I thought it would be crazy not to cover it, with literally 2 of my 4 companies literally being involved in this deal. So half of my portfolio is involved in merger and acquisition opportunities right now. So thank you guys so much for watching, and I'll catch you guys next time.